Ho ho, baby. It's not looking so good right now for the stock market at all. It's currently about 1 p.m. on the East Coast, so we're pretty much a little over halfway through the day now, and we have all the indexes down, and I mean down big time. The Russell's down over 3%, the S&P, the Nasdaq, the Dow, they're each down about 1.4 to 1.5%, and we have the VIX now up almost 7% with a bunch of stocks moving down big time that we have to cover later in the video. But before we do that, we have to break down what is causing the stock market to go down in the first place. And you guys probably have heard we got the January CPI data this morning, and let's just say inflation's coming up more than expected. We have a lot to go over, so hit the like button, make sure to subscribe, and you might as well follow me on X and on TikTok. Those links are down below. And with that being said, cheers from me and my empty cup of coffee, guys. I definitely have to re-up on this coffee, but let's just dive into it and break down what's going on right now, again, at about 1 p.m. on the East Coast on this beautiful Tuesday where we're actually getting a bunch of snow here in New Jersey. Not that crazy like it was a couple of weeks ago, but it is snowing a bit right now. And by the way, guys, let me know where you're watching this video from. If you're in the United States, what state are you watching this video from? If you're outside of the U.S., what country, what city? Let me know in the comments down below, and let's just dive into it. So again, you guys know at this point, all the indexes are taking a beating, right? Especially the small caps, with the Russell down now 3.2%, down 65 points on the day. It's at 1980, which we'll talk about here in a second. You guys can see here, which on the screen we have SPY. We have it down now about $10, a little less actually, more like $9 from the recent highs. In other words, a little under 2%. So SPY's taking, honestly, I would call this a healthy pullback, or it's seeing a healthy pullback here, maybe down even more. Maybe it'll come down more towards the 180 SMA, 483, 485. So SPY's taking a bit of a beating here, which overall, guys, come on, this is nothing. We're only down 2%. We just hit an all-time high a couple of days ago. So in my opinion, the markets were looking for a reason to sell off. Actually, yesterday we hit an all-time high, it looks like, right? Yeah, yesterday we hit a fresh high. Let me see here. Exactly where was that high? 503.50 on SPY, and Triple Q hit, I believe, 439, right? Yeah, 439, and now we're down to 428. And mind you, even though that's 2.5%, we're still clearly in an uptrend. And again, the stock market was just looking for a reason to sell off. And the Russell now, you guys can see if I zoom in a bit, we went from trying to break 2070 literally yesterday when the Russell went up like crazy. Now we're down, we're gapping down a good chunk. We're right above the 50 SMA on the 4-hour chart. So let's see what direction the Russell picks. Do we do, maybe do we see a reversal back over 2,000 points, or do we now dump down towards the lower 1900s, maybe down to the high 1800s? Time will tell. So again, the main reason why we're seeing a sell-off is because, well, inflation, like I said, came in hotter than expected. Let me pull it up here, and let's talk about it, guys. Cheers, by the way, again, for tuning in. I appreciate you all for being here. So before we actually break down all the categories here, let me pull up Forex Factory and read the headline numbers for you guys on the monthly basis and on a yearly basis, and we'll take a look here at the projections. So it looks like here the monthly number came in pretty hot at 0.3%. You guys can see, and core came in at 0.4%. Which the expectation for core CPI was 0.3%, so that came in higher than expected. And the headline number 0.3%, that came in hotter than the 0.2% monthly number that was expected, and the yearly number was 3.1%, which 2.9 was the projected number. So yeah, guys, inflation ticked up a little bit. It's not like it's exploding again or we have to panic and freak out, but it did go up a little bit. And this is exactly why Jerome Powell is not looking to cut rates prematurely, right? Which we all can agree at this point, or hopefully a lot of us, maybe not all of us, but hopefully a lot of us could agree at this point that prematurely cutting rates is a freaking bad idea. Bad idea, because then we actually risk a massive resurgence in inflation, which who knows, could happen again without us even cutting rates. It could still happen for all we know. We're seeing it tick up now a little bit. So the last thing Powell wants to do is cut rates, next month, or maybe he does. Who knows? But in my opinion, I think he wants to push it back as long as possible. He's pretty much telling us that. He's saying it himself. So, yeah, look, we got a little uptick, nothing crazy. And, markets are taking a bit of a haircut. Nothing crazy on the indexes, really. But we are noticing a bit of selling, which at the end of the day, guys, is not the end of the world by any stretch of the imagination, right? But again, realize this is why Powell does not want to go ahead and start chopping rates, like crazy right now. It all makes sense, right? So when it comes down to the different categories, so we have food, we have energy, then we have energy services, excuse me. Really, it's just food, energy, then all items less food, energy, which we have, new vehicles, cars and trucks, apparel, yada, yada, yada. So when it comes to these categories and the subcategories, we didn't see much movement in some of the categories, but we did see a big pop in food, especially food at home. You guys can see if I zoom in a little bit here, we have food in general, pretty much doubling month over month. So in December, it was 0.2%. In January, the monthly number came in at 0.4%. Food at home was 0.4%. In January, it was 0.1%. In December, it looks like food away from home was 0.3 in December, came in at 0.5 in January. So that came in higher than expected across all the subcategories for food. And it looks like energy, let's see here, guys. Energy came in at negative 0.9 in January. It was negative 0.2 in December, and pretty much all the energy subcategories declined month over month, which is pretty solid there. Let's see, fuel oil, negative 3.3% in December, negative 4.5% in January, negative 14% pretty much on an annualized basis for fuel oil, which is really good. And where we noticed, I think a drop here, let's see. Yeah, it was really noticeable in used cars and trucks. It was 0.6% in the green, that category, in December, and it came in at negative 3.4% in January. So used cars and trucks are coming down a little bit, which is good, especially if you're in that market. So keep your eyes on that subcategory, I guess you can say, or category, whatever you want to call it. I guess it is a category. We have new vehicles. That came in at negative, or actually flat at 0. It was 0.2 in the last month, so that declined as well. Apparel looks like it declined a bit. But yeah, nothing too crazy, really. I guess, again, the most notable subcategory or category was used cars and trucks. That came down a good chunk, which is awesome if you're in that market. But yeah, it looks like really the inflation is spiking in food, food at home, food in general, right? So what do you guys think about that? Let me know your thoughts down below in the comments. And quickly coming back over here to these indexes, or not really the indexes, but I want to cover here some stocks. I want to show you guys what's going on with ARM Holdings and Shopify. Both of these are down massively. We have ARM Holdings, which you guys know, reported numbers a couple of days ago. They crushed it. Stock went like crazy. Now it's finally seeing a pretty solid pullback. The stock's down about 17%. It looks like it's at $123. And just yesterday, we were at 164. So it's down about 25%, from the recent highs. So a decent drop there in ARM Holdings on the day. But still, guys, overall, from where it was before earnings, it is up big time. It is still up big time. It was at $72 before earnings. Now it's at 123. It's still up a whopping 70%, which is nuts. So I'm not telling you guys to go buy it. I'm not doing that. I'm not buying it personally, and obviously I'm not a financial advisor. All I'm saying is look at this dip. Keep your eyes on the dip here on a very hot stock. And let's see how it plays out. And Shopify is taking a haircut as well, not as much as ARM Holdings, but it is down 12.5% pretty much after the company reported earnings, which they came out this morning, and I couldn't really see anything that bad from the headline numbers, and that just leads me to believe maybe the stock was too ahead of itself heading into earnings. And mind you, it's still it's up very much. It's up massively over the past couple of months still. But essentially, the gain that we saw before earnings, we saw that erase, essentially, right? We've erased that entire gain. After the company beat on EPS and on revenue, it looks like Shopify did adjusted EPS of 34 cents, which beat the 31 cents expected, and sales came in at $2.14 billion, which beat the $2.08 billion expected. So double beat there for Shopify. And let's see, for revenue, they expect Q1 revenue to grow at low 20s percentage rate over Q4. Expects gross margin to increase around 150 basis points. And let's see here, guys. Anything else? Not really seeing anything else. But yeah, it's interesting, right? They beat headline numbers. They're still looking to grow about 20% in this quarter coming up. Not bad. And yeah, it could be a dip buy potentially. I'm gonna let it settle, let the dust settle a bit, and we'll see if it holds the mid-high 70s. Hopefully it does, because if it starts breaking down a bit here, guys, selling could potentially accelerate. I don't know about you guys, but that's kind of what I'm thinking. So let's do one more. I think Rivian's one that I want to look at. This company is set to report earnings not tomorrow on Wednesday, but the next Wednesday. So 8 days from today. So about a week from now, we have Rivian set to report. And this one's pretty beaten down. And notice how it's been consolidating over the past couple of weeks, about 2-3 weeks now. It's been holding that $15, $16 level. So who knows? Maybe they surprise. It's not guaranteed, but maybe they crush earnings, they surprise. And, Rivian does start to see a big move back towards $20. Maybe at some point it breaks $20. But that's if they crush earnings and if they surprise or we get some good news. It could easily work in the opposite direction as well. In fact, today it's down 6%. So who knows? What's the market pricing in today? We'll see. I don't know. But yeah, Rivian's next week. I'm watching it here as it is towards the bottom of the channel as well. That's worth mentioning here on the 4-hour chart. So what do you guys think? Let me know your thoughts in the comments. Don't forget to subscribe. Let me know where you're watching this video from as well down below. And if you want some free stocks, hey, 15 stocks, each up to $2,000. Simply use that Moomoo link down below. Open up your account and fund it with at least $100. You get 5 stocks, and fund it with at least $1,000. You get 10 more stocks, guys, totaling 15 stocks, each up to $2,000. So get on it. And there's a bunch of other perks by using that link down below. So use it, get your stocks. And with that being said, cheers. I'll catch you guys in the next one.